Welcome, I'm Ernie Goss, Professor of Economics here at Creighton University in beautiful downtown Omaha, Nebraska, here to report on our survey results for the month of June. And of course, how does it look? I'm talking about the neighborhood. Our neighborhood is stretching from North Dakota and Minnesota to Arkansas and Oklahoma, so pretty big neighborhood for Creighton University, pretty big neighborhood in terms of an economic survey. So what did it look like for the month of June? What did these men and women that are supply managers, in other words, they're buying. If they're buying today, if they're seeing things good today, we'll see things good later on. So that's why we're surveying supply managers. And what did they tell us? The overall number, I won't say it's a wonderful time in the neighborhood, but it's a better time in the neighborhood. The overall index was up from 50.4 in May. Now the number stretches from 0, which would obviously, well, I shouldn't say obviously, but that would be very bad, to 100, which would obviously be very good. 50 is growth neutral, so 50.4 for May was weak. Now it's up to 53.0 for June, so that's a little bit better. It's not as I said, it's not a wonderful time in the neighborhood. It's a better time in the neighborhood. Hiring was down, was still weak, below growth neutral, 49.1 for June. That's not a good number, but it could have been worse. We're seeing the value of the dollar being strong has really hurt these businesses that we're surveying out there. And of course, the ag sector and the energy sector and businesses tied to that are not doing as well. But overall, again, it was a pretty good report. Now here you'll see the graph as I'm charting it, and you'll see the indices. Now that's the U.S. index, overall index, and the Mid-American index moving almost in tandem. They're both weak, both pointing to good growth. We're at the point now, folks, where we're jumping up and down about 2% growth GDP. Well, I guess is that what we're looking at? Yes. Is that good? No, but it's better than it was. So that's all I can say there. It's the hiring gauge, again, not good. Inflation falls a bit, but it's still indicating wholesale inflationary pressures a bit stronger than we saw this time last year. We ask about looking ahead, how much you expect to increase the prices of goods you sell, your company sells. 1.7%, that's still a little below the Fed's goal of 2%, so still not enough inflationary pressures, at least at the wholesale level, at least looking at it from the Federal Reserve standpoint. Because the Federal Reserve, why am I talking about them? Because if they see things stronger, inflation more, they're going to be raising rates. We're now at 0%. We've been there 0% on the funds rate since 2008. This is an unusual time, as for the old Chinese proverb, may you live in interesting times. You are living in the most interesting times, economically speaking. Oklahoma and North Dakota are the two states that really pull things down, much below growth neutral. Of course, what is going on there? Energy, oil prices still below $60. That's really had a very significant impact in those two states, but it's only kicked in lately, although oil prices have been low. Well, they began to drop in the fourth quarter of last year. Now we're seeing the impacts. And as I said, inflationary pressures, the index was 64.9 in June, which is down from 69.1 in May. Still is strong. Exports, I can't explain it. The export index should be a lot weaker. It's moved from 50 to 51.3. We should see that number coming down. And why is that? Because the strong dollar makes our goods less competitively priced abroad. That's a little inconsistent. Now, if you look at the import number, up from 48.8 to 54.8, that's consistent. In other words, that index, what we're seeing with the strong dollar, it makes foreign goods more competitively priced abroad, and we should be importing more. We are importing more. So we're seeing that. Now, so all in all, to pull it together, it was a pretty good report. Looking ahead to the third and fourth quarter of this year, we're likely to see growth, just not as strong as we'd like to see. And I know that's sounding like a broken record. That's what we are seeing, a broken record of keep repeating this positive but slow growth. What should you watch out for in the next month? Keep an eye on the jobs report. Comes out tomorrow. That would be July the 2nd. It's early. It's usually on Friday. The folks at BLS, Bureau of Labor Statistics, want to get the heck out of D.C. and get on to celebrating the 4th, and they're releasing early. Keep an eye on that, as I've said many times, that wage number. Keep an eye on that wage number. That number growth is year over year now. From this would be from June to June. If that number begins to get up to 3, it's now at about 2 to 2.5%, moves above 2.5%, then Fed's going to raise rates. I think the Fed's going to raise rates anyway in the September meeting. Put that in the bank, or at least count on that. Look at the CPI, the Consumer Price Index, on July the 17th. That's the number that we need to keep watching as that index, as inflationary pressures move upward, as I think they will. That's something to keep an eye on. Retail trade on July the 14th, very important number, how the consumer's responding. All of a sudden they're buying. We want to see that continuation of that buying. Hopefully we will see that. What are the risk factors? What could foil all this? One thing, of course, is the Greek situation, the Greek potential default on their bonds. And there's a referendum next Sunday, on July the 5th, where they'll vote no or yes. No meaning the citizens say reject those austerity measures. We continue to want to spend more and pay less. Now the numbers just don't jive, folks. They've got to face up to these austerity measures. Will they? I don't know. But if they say no, we're talking about an exit from the Eurozone. Greece is one of 19 members of the Eurozone. An exit. That would be very contribute to volatility. It's not going to be that big a deal unless it spreads to Spain, contagion. Then we're going to see some impacts. The immediate impact would be equity markets, prices of stocks would drop, prices would grow, interest rates would come down, the value of the dollar would go up. But those are temporary. Don't buy into that. Don't sell into that. Don't freak out. It's a temporary phenomenon as long as it's contained to Greece. It's a big deal for the Greek citizens. It's not that big a deal for us investors here, workers here. Keep an eye on the 10-year Treasury, which reflects all that. The yield has come down from 2.4 to 2.3. It's likely to head lower. Don't be buying those bonds just because the yields are going lower and the prices are going higher. I wouldn't buy into that. Keep an eye on the value of the dollar. All this is contributing toward a strong dollar, and that makes it more difficult to sell our products abroad, makes them less competitively priced abroad, and that's very important for this part of the country where a strong dollar overall hurts. Minnesota, not quite as much. Minnesota's been growing very briskly. South Dakota as well. Can't explain that one. I don't know what's going on there. At least our numbers are much stronger there. But overall, it was a pretty good report. Thanks for joining us today. First business day of the month of July. Until we meet on August the 3rd, which is the first business day of August, we'll report on our July survey results. Until then, may your economic cup runneth over, and thank you so much.